Good morning, everybody, and welcome to the Morning Volatility Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to our morning report. I got some stuff I got to close here. We got all kinds of stuff happening. Mark's trade idea of the week: buy an FXE put. What's amazing is treasuries are still ripping. And the euro is stubbornly not going down. I don't quite know what's going on there. But it is dropping a little bit. All right. We also have some. So the market again down 2%. It's just ugly. It's just plain ugly. That's all I'm gonna say with it. It's just not looking very good. We are. Let's just move this up here a little bit. All right. Okay. And now you got to be realistic, right? You're down almost 2%. VIX is 26. Should be here. Is the storm coming? I have to say it's not going to surprise me if it does. Because right now, what do you have? Okay, Apple, I guess, is finally finally tired of it going down. It's probably what's keeping the market from free falling a little more. You have, some things are strangely sort of stuck. But all of the stocks that were leading the market, Google, I think we're looking at levels, Microsoft, even after good earnings that we haven't seen in a very long time. Tesla's back to 154. Twitter's on its way to, I don't know, $10. I'm not quite sure at this point. The only thing that really is catching a bid is treasuries, volatility, and gold. There were some rumors about CHK going into bankruptcy or something like that, or they hired some bankruptcy lawyers. There is, all it looks like is there's still a lot of blood in the water from all of this. I don't know when it ends. I have no real idea. As of right now, though, it's starting to spread. We even had a little strength in banks on Friday, and and that went away as well. It looked like we had rates, the employment picture wasn't bad, but for whatever reason, you have kind of this whiff of contagion from the oil sector. Oil prices are what? Down. I think crude is just hovering at $30 a barrel. I don't even think it's trading at just at $30. It's moving a little bit. They're really, as far as news goes, it feels like it's just more rumor than fact. The only other issue is China with it's down another. This is the FXI. I know they have a holiday, I believe, is either this week into next week. They still have a few days off. So for right now, volatility is let's just say it is bid, and it's bid for a reason, because the market's moving. That's as simple as I can say it. There's also bid, we're just talking about it in the pro chat, there's, the German Bund, there's a bid for that as well. So, yeah, I know. It looks like they might hire a bankruptcy attorney. That's the rumor. But, so, it's at some point, natural gas prices below $2 and oil at this level is going to start costing. And I think this is where we are. And that's giving us how exposed the banks are to all this, I don't know. But for right now, just everything looks really ugly in this patch. And I don't know when it's going to get better. I guess that's the simplest answer. So what we'll do is we're going to spend some time in the chat mostly looking for plays just to keep, betting on the slide lower. It seems like we want to keep sliding lower, and there's no real and there's no real way around it, to be honest. So that's kind of what I'm thinking. We don't have what we're being given really is we're just given a market going south for right now. There's also some more rumors about Greece. I don't know what's going on there, but basically overall, you have a market that's extremely volatile. Goldman traded almost 160 on Friday, and now it's trading 150. Again, possibly because bank crisis, the type of loans they might have extended to these guys. So we looked at some trades last week. We were kind of long time spreads in financials and then long puts in the XLF. Trades like that have seemed to be working. We looked at some long treasury stuff that seems to be kicking in a little bit. The short euro trade is finally kicking in a little bit. So again, there are some weird and there's some odd, there's odd bids coming in, like, you're looking at FCX, it's not down on the day. There's a little bid for commodities. There's a bid for gold. There's a bid for the gold miners. So it's, I think basically nobody can really put their finger on why sentiment is so bad, except the fact that sentiment is so bad. And generally, as opposed to our QEville, we are now in the realm where central bankers, it seems like where they thought they had a lot of control. The Fed is trying to raise rates, and just as you look at Treasury yields, Treasury yields keep going lower and Treasuries keep going up. I don't know if this is the bottom. It's kind of hard to say, but can we easily retest some of these levels? I mean, we're not very far away here, right? And everybody's laughing at the flash crash, but we're only 1% from there at this point. There's nothing from keeping us to testing that level again, especially if we get a few more bankruptcies in the oil patch and things like that. And that's what we got. All right. So with that, that's, again, we'll be looking for, again, trades that really are just sort of looking at this slide down. And what I have been noticing is the bounces we've been getting, they have not been as, let's just call them, we've had huge daily moves, but just not, this move up here to over, what is this, 2209 and the SPY 207. I just don't see those moves happening, right? That was basically a QE market. There is really no QE market right now because it's not really making it's not generating a lot of value. But on the flip side, some things are starting to get cheaper. Google's off 100 from its earnings highs. Facebook's off 10% from its earnings highs as well. Those are companies that actually don't have credit issues. Apple doesn't have credit issues. Amazon is down over $200 from its highs. So are they bargains? I don't know if they're bargains, but they still have the potential to bounce pretty good if the market bounces. All right. And at this point, that's what I'm looking at. If we get a little bounce in the market, what are the stocks that are going to take off? So right now it looks like anything related to gold, treasuries, those are the things you kind of want to own. And right now the financials look a little ugly. You want to be careful with those, just because of if we start to see one headline bankruptcy like CHK, if that's for real, that could make things a little messier. All right. All right, everybody. And with that, you all have a good day, and I will talk to you later.